In July 2023, something quietly seismic occurred in the world of American banking. It was not announced with fanfare. It did not come with press conferences or viral headlines. Instead, it arrived like any other routine notice in your mailbox. A small envelope among credit card offers, utility bills, and grocery coupons. Most people, conditioned to ignore such correspondence, tossed it aside without a second thought. Yet within those folded pages lay a transformation that would quietly rewire the very structure of how money moves in the United States. This was not a minor technological upgrade, not a faster mobile app or a slicker interface for online banking. This was the foundation of a new financial reality, one that would place every transaction, every cent of currency, directly under the infrastructure of the Federal Reserve. Consider for a moment the accumulation of letters that lands on American doorsteps every month. Statements, policy updates, fee schedules. Every line of text is a lesson in inattention designed to be skimmed, acknowledged only as routine, never truly read. That is how the banking system has maintained its quiet power for decades, through the inattentiveness of its customers. And yet, in July 2023, the routine veil hit a revolution. Your account, whether you realized it or not, had stepped off the familiar rails of private banking networks and was now moving on Federal Reserve master accounts. The letter was polite, cheerful, almost innocuous. It told you everything that wouldn't change: your account number, your debit card, the comfort of your direct deposits, access to tens of thousands of ATMs. It made it seem as if life went on uninterrupted. But beneath the friendly typography and marketing assurances, a profound shift was taking place, one that would erase the intermediaries between you and the government in the flow of your money. On July 20, 2023, the Federal Reserve unveiled the FedNow service. It was a system built not for speed, not for convenience, but for control. The automated clearinghouse, a system that had moved money across the country for over half a century, was replaced in its essence. No longer would payments travel through networks controlled by banks with some measure of independence or oversight. From that day forward, every transaction, every purchase, every transfer, every paycheck would settle directly through the Federal Reserve in real time, without the pause, without the buffer, without privacy. 4 days later, Webster Bank sent its letter, and in it, the real truth was buried beneath paragraphs of customer-friendly optimism. The architecture of money itself had changed. Your account had become a node, a direct connection to the machinery of centralized control. This is not unprecedented in American history. Look back to August 1971, when President Nixon closed the gold window, ending the convertibility of dollars into gold. Americans were told, as always, that nothing would change. Paychecks would still arrive, banks would still function, groceries would still be bought. And yet, the nature of money changed forever. Fiat currency, untethered from tangible value, became a tool entirely subject to government policy. Now, over 50 years later, we are witnessing the same historical pattern. A structural financial revolution, disguised as a service upgrade, slipping under the radar of public attention. And just as before, the mechanism relies on public inattention. Most Americans, conditioned by decades of inconsequential disclosures, never read the letters. The banks knew it. They counted on it. The timing of FedNow's launch was not reactive. It was deliberate. Announced in 2019, the Federal Reserve spent 4 years constructing an intricate web of technology, testing its systems, and quietly coordinating with major financial institutions. This was never a spontaneous modernization. It was a carefully planned march toward complete systemic control. The challenge was not technological. It was psychological. How could American bank accounts be migrated onto Federal Reserve infrastructure without causing alarm, debate, or resistance? The answer was subtlety: the letter, the disclosure, the suggestion of convenience, instant transfers, 24/7 availability, access to an enormous ATM network. All of it was a narrative designed to obscure the profound reality of the infrastructure shift. Venmo, Cash App, and other fintech apps already offered these conveniences. The speed and reach of transactions were never the upgrade. The upgrade was the shift in control, the invisibility of the mechanism, the pre-authorization of an entirely new financial order. Under FedNow, your transactions no longer pass between private banks. They are routed, processed, and settled directly through Federal Reserve master accounts. This means the government sees every dollar you spend, every payment you receive, every transfer you make, in real time. Gaining access to this information required subpoenas, warrants, or court orders. Banks acted as a buffer, a layer of intermediation that could protect customer privacy, challenge unreasonable demands, and maintain a degree of independence. Now, that buffer is gone. The Federal Reserve sits at the heart of the payment system, fully integrated, fully operational, and fully capable of surveillance without further approval. Your financial life has entered a new phase, one in which oversight is no longer exceptional. It is inherent. Yet, even this does not capture the full scope. Hidden in the small, print legal language of your July 2023 letter was consent for the next step, the eventual transition to central bank digital currency, CBDC. You did not opt in. You were not asked to agree in a meaningful sense. The terms you unknowingly accepted assumed your consent. When CBDC is fully launched, your FedNow account will seamlessly convert into a digital currency account, fully programmable and entirely visible to the Federal Reserve. The architecture is already in place. The pathway is clear. Most Americans have no idea that their bank accounts now serve as nodes in a system designed for instant, irrevocable, programmable monetary control. To understand why this matters, one must see the technical mechanics. Previously, payments moved through the automated clearinghouse, a batch-based system that operated during business hours, paused overnight, and often lagged on weekends. It was slower, but it provided checks and balance, a moment in which errors could be caught, transactions disputed, and privacy maintained. Banks settled transactions among themselves using internal reserves and networks. The Federal Reserve's role was supervisory, not transactional. FedNow eliminates these buffers entirely. Payments are instantaneous, irrevocable, and settled directly in Federal Reserve master accounts, 24 hours a day, 365 days a year. Every transaction becomes final the moment it occurs, every cent instantly recorded, every dollar visible. This has implications far beyond convenience. Under FedNow, the government has immediate insight into personal and corporate financial flows. They do not need to request access. They are already embedded in the process. And this is not a side effect, it is the intent. FedNow was engineered with CBDC in mind. Every feature, every design choice, every structural element of the system aligns with the requirements of programmable digital currency. Real-time settlement, centralized processing, irrevocable transactions, and direct government access. What appears to consumers as a service improvement is, in truth, the preparatory stage of a new era of a fully government-controlled financial system. The adoption strategy was equally subtle. Only 35 banks launched FedNow on day one, but the system was designed to cascade, leveraging correspondent banking networks to force widespread adoption. Banks that relied on early adopters were pulled into the infrastructure, whether they wanted it or not. A local bank offering you a money pass ATM network was actually joining the Federal Reserve rails through a broader corporate partnership. Consumers read about access to 40,000 ATMs, while the underlying reality went unnoticed. Their account had become part of a government-controlled payment system. The migration was seamless, nearly invisible, and almost entirely pre-approved by default consent. Irrevocability is another silent power of FedNow. Unlike traditional ACH or credit card systems, where transactions could be disputed, reversed, or refunded, FedNow enforces immediate finality. The payment cannot be undone. This may sound like efficiency, but efficiency in this context is control. In moments of emergency, the system allows for instantaneous seizure, freezing, or redirection of funds without intermediation. The architecture anticipates extraordinary government powers, embedding control into the very DNA of the financial system. In this way, Every citizen account becomes a node, every payment a traceable action, every transfer a record that cannot be reversed, questioned, or obfuscated. The next layer is CBDC, the inevitable evolution of FedNow. This is not digital currency as many imagine it, a mere convenience or technological novelty. It is programmable money, fully controllable at the level of each individual transaction. Dollars can expire if unused. Purchases can be restricted to approved categories. Savings can be automatically redirected to government accounts during emergencies. The systems tested during the COVID-19 pandemic, the rental assistance that only worked for approved expenses, the stimulus payments that expired if not spent promptly, were the pilot programs. CBDC will make these temporary mechanisms permanent, universal, and legally binding. Consider the implications. Today, you can still choose cash transfer between banks or use private services to preserve privacy. Tomorrow, under CBDC, the government will have the technological capability to dictate what you can spend, where, and how. Travel, political donations, lifestyle choices, charitable contributions, all could be programmed into your money. Financial autonomy becomes conditional. Monetary privacy becomes a relic of the past. Every economic decision can be subject to centralized oversight. And the pathway to this transformation was laid with a letter you never read, consent you never knowingly gave, and features that appeared to be routine improvements. Banks had no choice but to comply. FedNow infrastructure was a regulatory mandate disguised as voluntary modernization. Banks that refused would lose access to essential services, effectively ending their operation. No market forces, no competition, simply regulatory inevitability. The Federal Reserve engineered adoption, infrastructure, and consent simultaneously, ensuring a smooth migration to centralized digital currency. By the time CBDC fully launches, traditional cash and private digital payments will be constrained or eliminated. Alternatives will be gone, and the transition irreversible. The psychological strategy is remarkable in its subtlety. Americans trained over decades to ignore financial notices were pre-approved for the most significant monetary transformation of their lifetimes. Promises of instant transfers, convenience, and more ATM access distracted from the larger architecture. Complex legal language buried in small print masked the fundamental shift, the centralization of control over money itself. By the time the public fully understands what has occurred, the infrastructure will be operational, behavioral norms shifted, and cash usage reduced. The narrative of progress will obscure the reality of control. The timeline is clear. In 2019, the plan was announced. In 2023, the infrastructure launched. Integration began through 2025. Adoption accelerated across banks. Around 2026, pilot CBDC programs will begin, likely with government employees and contractors. By 2027 or 2028, commercial adoption will expand and the majority of financial transactions will require digital currency. By 2030, full digital currency control could be operational. By then, individuals will no longer have autonomous financial decision-making. Every transaction could be coded with restrictions, conditions, and monitoring baked into the currency itself. The financial system will be programmable, enforceable, and irrevocable. The gravity of this transformation is profound. Unlike any financial upgrade before it, FedNow and CBDC represent a fundamental reshaping of the relationship between citizen and state. Your money is no longer simply yours. It is a node in a network, a traceable, observable, and potentially controllable instrument. Your consent, assumed through routine notices, completed the authorization process. The technical and legal architecture exists. The behavioral and psychological architecture has already taken root. When the next phase arrives, it will appear as continuity, convenience, inevitability, but it will be absolute control. This is the quiet revolution of July 2023. While the public saw service upgrades and faster transfers, the Federal Reserve saw a fully operational node-based network ready for programmable digital currency. Most Americans never realized they participated in approving their own financial future, trading autonomy for convenience, privacy for speed, and awareness for comfort. The foundation has been built, and the pathway is complete. By the time the consequences are fully understood, the system will be operational, immutable, and seamlessly integrated into daily life. FedNow didn't merely upgrade banking. It built the architecture for total financial oversight, control, and compliance. It was the beginning of an era in which your money no longer belongs solely to you, but flows through the veins of a centrally controlled, programmable system, ready for the next phase, the age of CBDC.